We've seen a huge rise in the popularity of index investing in recent years. Some commentators view that as a negative thing, but it has had positive consequences. Dr. Tim Edwards, head of index investment strategy at S&P Dow Jones Indices, points to three benefits in particular that, in his view, are underappreciated. Here's the first.
You have an increasing number of investors who have saved money on management fees by moving from high fee products into much lower index fund-based products. We have published estimates that, and just to put some dollar figures on this, we do an annual estimate of how much money is in index funds tracking the S&P 500 and how much money is being saved compared to the average investment in an actively managed fund and the average fee that that's associated to. The statistics or the figures are of the order of over $20 billion a year saved in fees.
That is clearly a huge amount. And remember, that's just one index, the S&P 500. The second positive consequence of the growth of indexing, Dr. Edwards says, is that it's made markets more efficient. In other words, the opposite of what many commentators have been suggesting. Here's his explanation.
Who are these people who are buying index funds? In some cases, they will be people who have been disappointed by their own performance trying to beat the market, or the appointments of the agents or managers that they've appointed. And if you do believe, or if you think there is some aspect of skill involved, then what that means is those who were underperforming, those who were unskilled, are no longer providing the market with the opportunity to exploit them, because they are just now following the market average. So they're getting the average, they are no longer below average. A consequence of that means it is harder for the remaining active managers to outperform. The average intelligence just went up, the average skill went up, the average performance went up, so being above average just got harder.
But, says Dr. Edwards, there's a third benefit too, and that's a wider range of options for index investors.
The choice of indices and markets which are available in terms of an index option or an index function has broadened tremendously. So that nowadays there is a very broad menu of different asset classes, different segments of the markets for which there is a low-cost index fund alternative.
Of course, the rising popularity of index funds has been bad news for active fund managers. But it's hard to deny that, generally speaking, it has been good news for investors. The sooner you start investing, the more you'll benefit from the power of compounding in the years ahead. If you're not already doing so, the single most important thing you can do for your future financial well-being is to get started. Here at TEBI, our preferred investment platform for UK investors is InvestEngine. It's cheap and easy to use, and you can be up and running within minutes. What's more, TEBI viewers who start investing with InvestEngine receive a welcome bonus of up to £100. The minimum initial investment is £100. To claim your bonus, click on the link in the bio or YouTube description, or just use the promo code TEBI.